Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. In this video, we'll be talking about a fundamentally sound high quality growth stock where recent corrections have brought the price down to very attractive levels. Please watch this video to know more about this company. Now the company in question is Jamna Auto Industries Limited, which is available at Rs 79.65 and the face value for it is 1. The symbol for it is JAMNAAUTO. Now Jamna Auto Industries Limited is engaged in providing automotive suspension solutions for commercial vehicles. Now this is a leading spring manufacturer and supplier to commercial vehicle majors. It has posted a strong growth in net sales and profit after tax in Q1 FY19. Despite the significant rise in raw material prices, it posted operating margin expansion on year-on-year basis. With marquee clientele in its kitty and strong financials, the company is well placed and deserves investor attention. Recent correction in the stock has also made valuations very attractive for the long term. In Q1 FY19, the company posted a 107.1% growth in net revenue. It was supported by strong growth emanating from the medium and heavy commercial vehicle segment and low base of last year ahead of the implementation of GST. Despite the significant rise in raw material prices, the company posted an EBITDA margin expansion of 216 basis points and 146.9% growth in EBITDA. Margin expansion was led by operating leverage and lower operating and employee costs. Profit after tax witnessed a significant year-on-year growth of 129.9%. Now this company has a dominant position in CV springs and commands around 69% market share as of Q1 FY19 end. The company supplies to who's who of the industry. The management continues to focus on R&D to continue to be ahead of the curve. In fact, it is the only company with a spring R&D center in India. The company is investing to upgrade its information technology infrastructure, which is to be implemented across the company. Jamna Auto gets its technical competence from its technical association with US-based Ridwell Corporation, a global leader in design and manufacturing of air suspension and lift axles. It has also signed a technology transfer pact with Tinsley Bridge of UK. After regulatory challenges starting with demonetization followed by Bharat Stage 4 implementation and GST-led disruption, CV demand has increased sharply. In FY18, it witnessed domestic volume growth of 19.9% versus 14.2% growth for the overall industry. Despite the new axle load norms, momentum in CV demand continues. Jamna Auto, being the largest player in supplying suspension springs to CVs, would continue to gain from the upcycle in this segment. The company is likely to remain unaffected by the electric vehicle disruption going forward, as the products it manufactures are immune to the adoption of electric vehicles. Now Jamna Auto also has a strong presence in aftermarkets in India. Post GST, the company has been witnessing strong demand in aftermarkets led by a shift from unorganized to organized player due to lower price differential. It is now aggressively expanding its distribution network to touch its 30 to 35% market share target in the next couple of years. In an effort to de-risk its dependence on a single product, the management continues to add new products to its kitty. Currently, it has 4 new products under development. Even in terms of capacity, Jamna Auto is the second largest manufacturer across the globe with an installed capacity of 240,000 units across 9 manufacturing units. The management plans to open 2 more plants to service additional demand. The company has 2 upcoming plants, one each in Indore and Adityapur. Now the recent corrections in the stock have made the valuations very attractive. The stock is currently trading at close to 19.9 times and 16.2 times its FY19 and FY20 projected earnings respectively. Investors would be advised to evaluate this stock for the very long term. Now friends, please don't consider this to be a recommendation on our part. This was not a research on our part. This was published on a financial news website and we'll be providing a link to the article in the description section. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.